Hello, my name is Naz and I am here to talk to you today about the difference between an index ETF and an index mutual fund. So let's go over the definitions. So by definition, an index fund is a mutual fund that tracks the performance of a given index. For example, you could have an index fund that tracks and mimics the S&P 500 or the S&P TSX 60. Whereas an exchange traded fund, ETF, is a security that you buy and sell like a stock. You can find ETFs that track the very same indices as an index fund, but the two are similar yet different. So one key thing to note is that a mutual fund, if it's an index mutual fund, it'll be priced at the end of the day, and whereas an index ETF, because it trades like an equity in the market, it is you're constantly buying and selling at an exchange if you wish to do so. So one can be sold with using the price at the end of the day, whereas an ETF, you can see the price before selling and attempt to get that price because it is trading like a equity. And when looking at these two separate yet similar types of securities, some things investors may think about is the management expense ratio associated with each type of security. Typically, well, I shouldn't say typically because products are changing all the time, but when looking at the prospectus of an index mutual fund or an index ETF, the prospectus will outline the MER management expense ratio associated with that fund. And that may very well make or break your decision to whether you want to invest in it or not. And in addition to that, just so that you're aware, a mutual fund is known as an open-ended fund, whereas ETF is known as a closed-end fund. So certain mutual funds, an index mutual fund, may also have something called a DSC, deferred sales charge fee. So an index mutual fund may choose to restrict liquidation until a certain date, and if you choose to sell prior to that date, you may have to pay a penalty, or there may be like a 10% deferred sales charge fee, things like that. Whereas an ETF, an advantage of that would be that ETF don't have a restriction for when you can sell. They trade like an equity. You can sell them at any time and get your money back or take advantage of any gains you may have had. So if you have any questions, please ask me in the link below, and I want to thank you very much for watching. These are two interesting types of securities with slight, succinct differences. Thank you for watching.